Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the chart. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is in a very strong uptrend, fueled by a very strong institutional long-term buying. And we will be speaking about the institutional buying in just a few moments when we move to the commitment of traders analysis in the long term. But if we want to follow the movements and track this uptrend, what we have to first of all identify is that all this major uptrend here on gold started exactly from this level. This was a historical break of structure. This level was already acting as previous resistance, preceding all these rejections to the downside. The market then broke above the zone with this impulse, and all that previous resistance was turned support here. The market retested the level as previous resistance turned support, and at the moment is in the process of rejecting that level to the upside. We can notice that so far the market has already created a series of impulses and corrections. We can notice a first higher high here, higher low, new impulse creating a new higher high, new correction creating a higher low. So far the market has just created yet another new monthly all-time high, so a new monthly higher high, continuing with this monthly uptrend, because an uptrend by definition is a series of impulses and corrections, so higher highs and higher lows. Now, continuing with this reasoning, the next logical step would be to see a new correction before then the continuation to the upside, so a new higher low and then a new potential monthly higher high if this monthly uptrend is to continue. So let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is quite clear as well. We can notice how the market also here in the weekly has been creating a series of higher highs and higher lows. The last move was the creation of a new weekly higher high. The next logical step would be a higher low and then more bullish continuation. So there is definitely the possibility of seeing a bit more bearish price action before then more potential bullish continuation here from a weekly standpoint. We can also notice that as we have an impulse and now the start of a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have at 0.32 and 50% retracements lining up inside of this area. Now, this area is also previous resistance turned support if we go down on the daily time frame. In fact, from a daily perspective, what we can notice is that during all this massive move to the upside, there is one level at which the market stopped, meaning that it found strong sellers at this level, creating this red candle. After that, the market broke out to the upside from this level, meaning that this zone is now previous daily resistance from which this move to the downside was created, which now that the market has broken it to the upside is turned support. So there's a good probability that if the market will really go and test what kind of liquidity we have inside of this zone, creating that deeper correction, at that point there is definitely the possibility of seeing strong institutional buying inside of this area, which at that point could potentially push the price higher. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for gold, we can see how with the last reports, net positions have been decreased. We went from 249k to 175k net positions, showing how institutions in the short term are moving back to the bearish side for gold. They added 14,000 shorts and closed 12,000 longs. This shows how there is definitely the possibility of seeing more bearish price action in the short term. So that correction that we were expecting on the monthly and weekly timeframes is definitely still possible, as institutions in the short term, with just the last 4 reports, are moving back to the bearish side for gold. But we have to keep in mind that in the long term, the institutions are still massively positioned to the bullish side for gold, with 258,000 longs compared to only 83,000 shorts. So as institutions are way more aggressively to the bullish side in the long term, there is a possibility of seeing short-term weakness and then more institutional buying. So in a situation like this, what would I expect? And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So if the market will correct to this area, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.